Tesla's stock at the time of recording this video is down about 1%. In fact, Tesla's stock actually gapped up today in pre-market. So what's causing Tesla to fall, and is this actually anything worth really mentioning? I actually find today's 1% drop kind of ironic, because apparently the reason why Tesla's stock is down today is because Phillips Securities analyst Jonathan Wu downgraded Tesla's stock to sell from the previous reduced rating on Friday. Wu also cut his Tesla stock price target to $135 per share, down from $145 per share. The analyst decreased financial estimates on expectations that margins will face more difficulties amid soft pricing and European Union tariffs on China exports. Wu added the Tesla management, mostly Chief Executive Elon Musk, did not do enough on the Q2 earnings call to dispel concerns about its auto business. The firm also noted that Musk and Tesla are focused on lofty plans around the robotaxi and Optimus robot. Wu's view is that those products are still at least 3 to 5 years away from contributing to the company's growth. At the same time today, President Capital upgrades Tesla to buy from neutral and adjust the price target to $255 per share from $185 per share. So that's very bullish. Fubon Securities adjust price target on Tesla to $282 per share from $233 per share, while also maintaining their buy rating. And then, of course, Phillips Securities downgrades Tesla to sell from reduce and adjust price target to $135 per share from $145 per share. This, to me, just sounds ridiculous when you look at the other analyst comments today. We also had PCE that came out today. That is the Fed's preferred measure of inflation. And you can see here from Nick Timmerhouse, the core PCE price index rose 0.18% in June, spot on with expectations, holding the 12-month rate at 2.6%. May was revised to 0.13%. from 0.08%, which is the most benign possible explanation for the larger than anticipated Q2 figure reported on Thursday. 3-month annualized core PCE inflation was 2.3% in June, the lowest since December, and the 6-month annualized rate was 3.4%, the highest in a year, but still below the 4% rate of 1 year earlier. We are continuing to show progress on inflation, and this is actually having a very positive effect on markets today, which I find just, again, ironic that Tesla's down on a day that's actually quite bullish for the broader markets. Really, all of your indexes doing well. The Russell 2000 is up 1.08%, the Nasdaq is up 1.02%, the S&P is up 1.21%, and the Dow Jones Industrial Average is the outperformer today, up 1.8%. So specifically, cyclicals like the Dow that are connected to the economy, those are outperforming the most. And then you have the Russell 2000 that is continuing to outperform and do well, which is also cyclical to the economy and, well, very dependent on interest rates. Apparently, short seller Andrew Left of Citron is charged with fraud by prosecutors and the SEC. Federal prosecutors criminally charged the well-known short seller Andrew Left with securities fraud related to allegedly using his public platform to illegally profit from manipulating stock market activity. Left and his firm Citron Capital also were separately charged in a civil fraud action by the Securities and Exchange Commission, which accused them of engaging in a $20 million multi-year scheme to defraud followers by publishing false and misleading statements regarding his supposed stock trading recommendations. Companies identified in his criminal indictment include Nvidia, Tesla, X, and more. Morgan Stanley's Adam Jonas says, quote, "As Tesla continues to diversify away from the auto industry and towards the autonomous industrial complex, AIC, We wanted to highlight some interesting information that, while they didn't grab any headlines, may be consequential over time. As it's notable that the services and other revenues increased 21% year over year, while automotive revenues decreased during the same period. The increases were primarily due to increases in non-warranty maintenance services and collision revenue, used vehicle revenue, insurance services revenue, paid supercharging revenue, and part sales revenue. We note that these services revenues should largely grow in line with the growth of Tesla's installed car population, which we forecast rises to 24 million units by 2030, a 24% CAGR from 2024 through 2030. We also note that the margins derived from after-sales service of the car fleet are typically far higher than point-of-sale margins. China sales have peaked and will likely continue to fall as a percent of total revenue from here. Tesla China source revenues accounted for 18.2% of Tesla's total revenues in Q2. While this line may exhibit seasonal volatility in the quarters ahead, we expect the long-term trend for Tesla China exposure to continue to fall systematically. By 2030, we forecast that China accounts for roughly 10% of Tesla's auto unit volume and between 6 to 7% of total group revenue. Adam Jonas actually says that they believe it would be highly unlikely that Tesla would be allowed to offer such technology with the PRC, like autonomous ride-hailing technology, robo-taxi technology, which is very interesting that he's saying that. He says the dual-purpose element of embodied AI carries obvious national security sensitivities. And he also goes on to say Tesla's AI infrastructure base is by far the fastest rising part of its asset base. Tesla only began breaking out its AI infrastructure capex and net asset base from Q2 2024 results. According to note 4, page 17 of the Q2 2024 10Q, Tesla's AI infrastructure net assets stood at $2.5 billion, up 63% from $1.5 billion at the start of the year. We note that at the same footnote shows construction in progress at $6.8 billion, which among other items includes AI-related assets which have not yet been placed in service. We reckon investors will be paying closer attention to the growth of this infrastructure base as Tesla provides greater disclosure on its generative AI/embodied AI efforts. EV maker XPeng to launch a robotaxi model in 2026, according to the CEO. And Tesla has now installed 500 supercharger stalls in Austria. Photo of the 500th stall. Nonetheless, here on the day today, short interest of free float is sitting at 3.76%. You have $22.98 billion currently sold short in Tesla stock, totaling 104.35 million shares. Now, you're actually seeing shorts starting to cover on short positions in Tesla as Tesla stock has fallen. Now, that just really goes to show big money's not that bearish on Tesla, believe it or not. If they thought the stock was going to continue to fall, they would be adding to their short positions like they typically did any other time. They're actually taking this opportunity to cover on short positions as Tesla stock falls. And a lot of Tesla shorts are still underwater on their positions, but it's not as big of a loss as it was before. So it's probably one of those things like, hey, we should probably cover now, because if Tesla stock does go higher again in the next couple of months, this thing could really run, and we don't want to be in the same scenario we were just in again. Option activity today in Tesla remains very strong. Take a look at this unusual sweep. It is a January 17th, 2025 $500 call. I mean, there is some very exceptionally bullish trades being placed here. This one, a February 21st, 2025 340 call. I mean, it's hard to argue with some of these trades. A February 21st, 2025 450 call. Some people are expecting Tesla stock could rally big time over the next 6-ish months. You do have 9 different trades today totaling $5.7 million with a positive order value of 64%. Over the past week, keep in mind Tesla stock over the past week has not done well. You've seen 140 institutional orders totaling $56.63 million with a positive order value of 80%. So that's not what you would expect. If you looked at Tesla stock, the chart, and guessed what the option activity would look like, it would not be 80% positive. That would not be my guess, at least. That just, again, goes to show that Wall Street's actually pretty bullish on Tesla right now. And if we take a look at Google Trends data, we do have the Cybertruck at 77, up from 63 in the last numbers that we had. The Model Y currently at, let's see, going from 24 to 27. The Model 3 staying at 23. The Model S going from 10 to 11. And the Model X going from 8 to 9. So overall, some pretty solid Google Trends data. Google Trends data for full self-driving is sitting at 21, which is still a lot higher than it was before the free trial started, continuing to suggest at least decent momentum in potential full self-driving signups. Tesla continues to run about 4,000 different ads with Google. Tesla's global inventory numbers for the Model Y sitting at about 6,400, the Model 3 at 4,800, the Model X at 3,250, and the Model S at about 2,700. Here today, sentiment over on StockTwits, mainly from retail investors. Let's be honest, hedge funds institutions are probably not getting on here too much and posting their sentiment or comments. That's why I like to use this as a gauge for retail investor sentiment. You could see it's bearish today at 34. It was neutral at 52 yesterday. Throughout this latest rally with Tesla, you've been on the bearish side, and that's one reason why I believe retail just wasn't really behind this rally. A lot of this rally, or most of this rally, I should say, was driven by institutional investors, and you see that in the option activity over on Ortex. They're even still very bullish, whereas retail is not as bullish, and I think retail may miss the next leg up of this rally when it does come because of that reason. Now, message volume today is normal at 49. Yesterday, it was high at 57, and the participation ratio today is normal at 54. The percent of stocks trading above their 50-day moving average today is at 67.35%. You have about 3% of all stocks out there on our markets breaking above their 50-day moving average today. So, I mean, this is a pretty good number. There's still room for a lot more breath thrust, if you will. Back in November, December, you were at like 86% of stocks trading above their 50-day moving average. You're at 67% now. That is the highest level you have seen since January of 2024. So you're definitely in the best place you have been in 8 months now for the average stock. You're actually starting to see the average stock participate and to the greater extent actually outperform the S&P and the NASDAQ. We did have a new AI investor sentiment survey that came out yesterday showing bullish investors at 43.2%, neutral investors at 25.1%, and bearish investors at 31.7%. 10-year Treasury yields are down about 5 basis points today following the inline PCE report that we got this morning. Odds of a next week Fed rate cut sit at 5.2%, pretty much unchanged from yesterday. The odds of a September 18th rate cut are basically unchanged as well from yesterday. Actually up a little bit, going from 88.2% chance of a cut to 89.1% chance of a cut. The odds of 2 rate cuts by September, or a 50 basis point rate cut potentially in September, is actually down by about 1%. So just solidifying that 1 rate cut by September. By November 7th, you're pricing in 2 rate cuts, 62.3% odds, only 1 cut priced at 30.4% odds. And December 18, 2024, you're firmly expecting 3 cuts priced at 58.6% odds, and 2 cuts only priced at 32.6% odds. The 10 and 2-year yield curve inversion is now only inverted about 14 basis points. We'll talk about this a little bit more in the next video. Historically, when you get this on inversion, you get a lot of pain in markets, and that does kind of correlate with what we have started to see recently in equities. And I will discuss what is coming next for markets, because I think you really need to know this. This is probably the most critical information, the most important video. It's coming out at 8 p.m. tonight that you are going to see for a very long time, because that information could make you a lot a lot. Now, obviously, you could lose money as well if you take that information and follow it exactly, or treat it as 100% correct. It could obviously be wrong, but it's just my perspective, and I don't think it will be wrong. But I'm not a financial advisor, I'm not a financial planner, and whatever you do with that information coming out at 8 p.m. tonight is your choice. We'll talk specifically broad markets as well as Tesla stock. You can see today on a technical basis, look at that, Tesla finding support at this longer term downtrending trend line. Fantastic. Really the main level you want to stay above now, since it's been some days and this line continues to go down, is about $220 per share. If we do get more consolidation or downside in broader markets and that affects Tesla, then you definitely want to watch that 200-day moving average at about $205 per share, and the 50-day moving average is starting to converge on that, also at about $204 per share. I think that would be a huge level of support, and then $200 per share. I don't think Tesla falls under $200 per share anytime soon, in my personal opinion. Again, we'll talk about that more at 8 p.m. tonight, but it is a possibility eventually, when a growth scare does come, that Tesla could get materially beaten down. The question is Tesla $400 stock when that growth scare comes? Does it fall back to $300, or is it a $300 stock and does it fall back to $200? There can be different potential reactions whenever this growth scare comes, but eventually it will be coming, long story short. If you take a look at the RSI is at 46.7, which is under the neutral level of 50, so definitely some room to see a little bit of a bounce here. And Tesla stock is almost back positive today, only down 0.25% now at the time of recording this video. The MACD lines are curling down pretty hard as well. MACD now at 7.29. And the signal line at 13.11, so definitely some room to get a bounce there as well. So let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. You guys have a fantastic rest of your day. Oh, and by the way, if you want to come trade with us live in real time, check out that link down below in the description of this video. Thank you for watching. I will see you in the next one.